I want to start off with talking to Richard and Jyoti. I'll start with you, Richard. Specifically, in a few words, talk about your organization and how it relates to big data and with big data.
So Altus Group has been around for a long time. It was formed about 10 years ago. We do a variety of different services, tax advisory, valuation work in the commercial space. We do construction as well for new homes, which we monitor and work there. And then I run the data division, which looks at commercial data in terms of leasing and transaction data. In terms of residential, we do the HPI index, which was mentioned earlier today. We also track new homes built and developments across the country and condo sales. And we also do a product called the Firm, which is home buyers' intentions and indebtedness levels, which is a survey-based product. And it's a great team. I'm relatively new to the organization. I've only been here for a little over a year. As I mentioned, I came from the stock exchange, which was a different world of big data. You know, we worked really hard to build supercomputers to do matching of stocks and fractions in milliseconds and microseconds and all that thing. Which is also interesting too, because from that background standpoint, it's a marketplace, much like you guys operate, and our clients were brokers. And there was no question that we were a monopoly back in the day. So we had to deal with a lot of the challenges that is currently facing the realtor industry. And I think I have a few insights on that I'd like to share today.
Cool, awesome. Jyoti.
So I'm with the Westman Center for Real Estate Studies. That's fine.
Don't
Can you hear me okay?
I can't hear you.
How about now?
She's got some very important things to say. Are we good?
We're good? Okay. Thank you. So I'm with the Westman Center for Real Estate Studies, and we're located within the Haskayne School of Business at the University of Calgary. We're fairly new, started up a few years ago, and our mandate is really to make sure that we're weighing in on the type of content that's in the curriculum for our students. We also do research and what we call thought leadership. That's sort of the applied research side. And we do a lot of community engagement. So events like this and events that we host ourselves, like one coming up tomorrow where we're talking about the shared economy and the new nature of innovation and entrepreneurialism in real estate. And one of the interesting things for me being a researcher in this center is that I come from an urban sociology background, which is quite a bit different than a lot of my colleagues who have a business background, who are really into the finance side of things or, you know, the real property value, that sort of thing. I'm really driven by the intersection between people and place. So for me, when we talk about data, it has as much to do with social behavior and patterns and what the data can show us as much as it does to do with property values and permit numbers, those types of things. So as a sociologist, I want to understand how the spaces and places that we're creating for people are being used. Are they being used with the intent that we created them, or are they being used differently? And what can the data show us that allows us to make our cities and spaces better for that human interaction?
Awesome. So when I was moderating that panel for you guys, was it RESA? Real Estate
Yeah, the Real Estate
Yeah.
Students Association.
Fantastic. Your real estate concentration, that starts when?
Next fall, so in September of 2017, you will be able to declare a major, if you will. So you can have a concentration at the BCom level or a specialization at the MBA level in real estate studies.
That's awesome. Like that's a huge deal. And are you guys, as far as the rest of Canada is concerned, how unique is that program?
The way we've structured our program is quite unique because we're ensuring that our students have a holistic perspective so they understand the impact of the regulatory bodies as well as the markets when it comes to real estate. We're one of the few that's offering the program in Canada. I believe we're the only ones that are doing it at an undergrad and graduate level right now.
That's awesome. I had the privilege of moderating a panel that they had set, the Real Estate Students Association, I'm saying that correctly, I believe, had set up, and they had in some lenders and some mortgage brokers and a real estate lawyer. And I got to tell you, being in that setting a number of times in my career, I have never been asked so many quality questions. I mean, they were brilliant questions that were being asked in the audience. So, I mean, not as good as this group, of course, today. I'm expecting some big things today. But anyways, it was pretty good. It was pretty good. I was impressed. So like I mentioned, I'm going to mix up the questions a little bit and maybe put you in a bit of a hot seat because the first question seemed a little bit nebulous and very open-ended. So I've drilled it down a little bit here, and I'm going to go back to some of the comments from Jonathan Spinetto and others this morning where they were talking about the data sets that they were looking at. Now, And I find a lot of that fascinating. I mean, when we were out in Orlando, he was giving the example of looking at the acquisition of diaper coupons online and seeing what that would potentially mean for what a consumer is doing in their life. So now we're talking about the statistics end of things. Can you give us some examples, just some high-level examples of some of the statistics your organizations are looking at specifically? And I know it's tough for you because you've already done some of this already in your presentation. But some stats. What are some interesting stats that you guys focus on in your businesses?
Well, specifically the HPI is probably the biggest wealth of stats, which we work with you and on doing that. And really, the reason why that is so interesting is because averages are dangerous, and the TREB's been very, very key in commenting in the paper on that, as John will say. It's not about the average price in that month, because a single family house could have 3,000 square feet, 1,500 square feet, and it creates a lot of problems when people look at that, and it can skew it, particularly when you get down to the neighborhoods and a lot of the specific flyers that get handed out and what they're telling people. So the ability, we've built a hedonic model, which is a very robust. Bank of Canada looked at it, Stats Canada looked at it. I think it's broadly viewed as being one of the best in class in the country. And what that allows us to do is really accurate trends and seeing what's driving those prices. And the reason why that's important is because when it gets into the hands of a realtor, you need to understand if there is a price that might come out of there. You do an AVM, it tells you what the house might be worth. It doesn't definitively tell you what that house is worth because it's an aggregated bunch of numbers. It's just math. What really needs to happen at that point in time is to engage with your realtor and say, so on average, my house should be worth this because of the square footage. But why is it different? And that serves as a platform for you guys then to go to work and say, wow, but you got this custom kitchen, and you have this and this aspect, and you're close to schools, and you're close to this. And it'll really differentiate yourself in the marketplace. Talking about some of the data challenges that we're talking about with TREB, if the data gets out there, I've actually had other technology players on the back heels of that TREB ruling said, oh, this is great. I'm not even going to talk to TREB anymore. I don't have to talk to the boards. I'm just going to go to the technology providers, and I'll get the data myself. They don't own it. I'll just take it. And I was pretty shocked to hear that. That's and in the hands of those folks, they have the data. They can do all sorts of math too. Doesn't mean it's good math. It might be bad math. So it's really important to go work with a trusted player who's got a good, robust model, but then on top of that, have that relationship where you can then stand on top of it and do more with it.
Yeah, and that trusted player, I think, is key, right? Because it's interesting to see it's the derivatives and the downstream and who's doing what with it. You lose all control in that, and what does it look like? Now, you could argue that there could be some enhanced value in some of that, but it's a risky play, so totally get it. Jyoti.
Statistics it's just such an interesting area, and it's something that we like to use to prove or disprove something. And we like to hold up stats to say that we're right about something. And so I'm going to use an example of items that come to Calgary City Council or to Planning Commission. Everyone has probably heard this argument that, you know what, I don't want that in my neighborhood because it's going to bring down my property values. Or, oh, everyone knows that the more renters you have in your neighborhood, the worse your neighborhood is perceived and it lowers your property values. Apparently anything you do that's different will lower your property values. But I have yet to hear someone come forward and say, actually, the data shows that it does not lower your property values. So what I've been trying to push for and trying to advocate for is this idea of doing a quick analysis to be able to say, no, if you look at this particular neighborhood that had an affordable housing project brought in, over the course of time, the neighborhood property values stayed the same, or they increased with inflation, or in fact, they went up. We have the ability to do those things. Our issue is we're not very good at sharing that data. And sometimes we get so caught up in the passion that the statistics raise that we forget to go back and look at the facts. So, I mean, if there's one thing I can say about stats, you can spin them any way you want to tell any story that you want to. So we have to be very careful with how we're using them and what we're trying to use them for.
Yes, and that actually is a great segue to one of the future questions. If we provided you access, what would you do with our data feed? Richard.
Well, I think the first thing that I would really like to do is, I think, start building, I think, the AVM space out a little bit better. I think, and then give it back to you to actually do that. Because I think we have this great product, but it's relatively contained. I mean, honestly, we do a lot of great work with it. You provide it in little pieces, but I think you can do a lot more with it. And I think not only that, I think the whole real estate transaction cycle could do a lot more with it. So you have a situation right now where you match the buyer and seller. Well, the bank's trying to figure out what the value of the house so they can loan on it or not. If you had that pre-approved and the bank said, look, you're in line with those numbers, we buy in that model, it's pre-approved in terms of loan to value, that's done right away. It makes your life a little bit easier. The insurance companies, they're looking for that same place. We do work with some of the insurers in Quebec marketplace, where we allow them to value the houses and they get a lot of value out of that. They're looking for a solution there. Quite frankly, even CMHC's looking at Emily, which is now been around for a long time. They're wondering, is this the right product? Should we be doing something more to enhance it, make it more accurate? The need for a level playing field is really important, because once you have that consistent ecosystem, then you can start building data on top of it and building great products. And that's really what we'd love to be able to get to, where we can start taking that data in a good, I think, relatively safe manner. I mean, the HPI is well masked, well integrated, and abstracted, and doing some great work with it.
Cool. Jyoti?
I would go back to something that Anne-Marie said, and that's this idea of, are we looking at the market as a whole? And I would argue, are we looking at the housing system as a whole, or are we looking at buildings in general as a whole? Are we looking at real estate in a holistic manner? And if we're not, what are the collaborations that are needed, and what are the partnerships that we need to strike to be able to do that? And you've mentioned a lot of great examples, the partnership with the City of Calgary. You've talked about partnerships with lenders and other organizations. I mean, ultimately, I think one of the biggest places for the university to be involved is to help formulate the types of research questions that really demonstrate why we need to work better together and what those collaborations could and should result in. Because I think without a solid research question, it's hard to say what you want the data for. And I think that's sometimes the struggle. I think people will say, I don't want to share my data with you because I don't know what you're going to do with it. And I find I have that struggle myself. I will go to some of our faculty members and they'll say, if you could just get me MLS data, I would be able to do so much with it. Like what? Well, I'd have to see it first. And it's a good point. It's a perfectly good point, because sometimes you can find patterns and themes that you hadn't considered. But on the other hand, I think you have to go to somebody and say, this is what I'm hoping to extract from the data that you have. So, if I was asking that question, I think my response would be, I want to look at how those communities that we deem are successful have demonstrated what their value is over time through real estate. And has that real estate value been enhanced by other amenities, whether it's schools or whether it's a sports field of some sort, or is it the way that their retail area is structured? What is it about that community that's made it great? And how can we replicate it for the future? And how can we ease the tension that people have of change? How can we get them to let go of their resistance, because it could actually be a better result for them?
Yeah, and I tend to agree. I think there's a lot of opportunity, particularly when it comes to policy decisions that are being made, that you can take a lot of our data and actually help support those arguments. And I do think that's an area that just a lot of that work hasn't really been done.
Yeah, and Shane touched on earlier, and when I was referencing earlier, was with people putting values to their data, has that become one of those items that's been an additional barrier to somebody wanting to share their data? That inequality of value, or the fact that, no, it's just too much, or whatever it is. But, what are some of the other barriers that you're seeing for people wanting to share their data? You've touched on it already, but Richard, just going to you, what are some of the arguments for people? Forget about the we lose control argument, because that's pretty easy to come across and understand right up from the outset. But what other arguments are you hearing for not wanting to share?
Lisa mentioned it too. Fear is the overriding one, without a doubt, because people don't understand it. They don't understand their data, what can be done with it. So it's like a gun. If you know how to use a gun, you feel safe with it. If you have an opportunity with it. If you don't know how to use a gun safely, you're automatically scared of it, and you don't want to touch it. Maybe just leave it alone. That's the number one issue. Is I've had people come in and say, well, if I'll give you this data and it's worth billions of dollars. Maybe, but it's not worth anything right now. Mm-hmm. You're not doing anything with it. Right. So how do you unlock that value in a safe way? And I think part of that is actually just you go slow. First of all, I don't think you rush into things. You want to make sure you have good partners that you can trust, and you have that transparency and symmetry towards alignment of goals. So basically, there can't be a situation where I can take it, run away with it, and do something, and you don't understand what I'm doing with it, and somehow you're out of the loop. If you have total transparency, it's like a slice of cake, everyone gets the same little piece of each layer, I think you have a good system that you can build trust on.
So is there an argument to be made then that by enhancing and working with somebody's data that you could potentially increase the value of the data? I mean, is that something that you guys would?
100%.
Yeah.
And in fact, not only that, I think at the board, I would want you to be not only just using your data, but taking in more data. Because if you talk about we're at the start of a journey. And it is just getting started. And it's going to be a fast journey, I think, where data also becomes an enabler and it gets loose and people start driving very fast, very far. Hopefully, I think we all hope that it's not something that John talked about, where it gets pried out of your hands and thrown on the sidewalk for everyone to pick up and do with what they will. But there will be people that will push very far and very fast to do things, and they could do some damage. They could do damage to marketplaces, they could do damage to some people and some privacy issues, as we heard, which is scary. But if there is a more open data, in some cases it's good. Some that's happening anyway. We heard from the city, there's new open data initiatives. Some of this information is going to get out of there anyway. So how do you as an organization stay ahead of that wave? And I think it's branding, first of all. You have good data, you have clean data. That's a big step up. You already have a lead, but how do you maintain that lead? Get other data, commingle it, add value to it, bring it to your members so they can stay ahead of the curve and keep driving forward and adding more value quickly. And if you'll stay in that pole position if you do that. But if you hunker down and turtle, people will move around you and they'll find some way to do it at some point in time, or there'll be a ruling or something, and it's probably not the best long-term strategy.
Right. So both of you have touched on it, and I want to get Anne-Marie's perspective on this as well. So what do you see as potential data opportunities when it comes to statistics? And I want you to frame that as best you can for CREB.
Yeah.
For CREB's opportunities.
I see a lot of opportunities with the partnerships. I mean, I think often the challenge is providing aggregate versus transactional data. I think that there is a lot of stuff we can do with our aggregate data that really still protects some of those concerns with regarding to privacy and things like that exist, but still being able to provide value to these groups and to create those relationships with providing more of an aggregate level data.
Okay. More collaboration for sure.
Yeah.
Okay. Jyoti, let's go to you.
Along with the collaboration, I would say we need to respect the fact that data can be as unidimensional or robust as we let it be. And one type of data is not going to be the problem solver. So I think it's important to remember that if you've got a lot of quantitative data, which you tend to have as CREB, you need to go for stuff that's a little bit more qualitative as well. And Anne-Marie, you referred to this earlier. You said, we've got to look at the socio-demographics in addition to the stuff that we've got. And I think those things are important. I'll give you an example, because sometimes
Please do.
The examples light things up.
Yep.
There was a developer looking at land in Northeast Calgary trying to get a retail grocer anchor tenant, and was having all kinds of trouble getting an anchor tenant from the grocery sector because the grocery chains kept saying, that's not our demographic. We don't want to put any of our grocery stores there because that's not our demographic. And so he came to me and said, what do you think? And I said, well, I find it kind of offensive that it's not their demographic. What does that even mean? If they want to come right out and say it, they're saying that these people don't shop at our stores and they don't have the type of wealth that we want to see in a potential client. So let's call it what it is. And if that's the case, where are they getting this from? And so we did a little bit of digging, and we actually partnered with Altus Group to figure out that what was happening is that the grocers were looking at dated data. So they were looking at Stats Canada information to figure out what their demographic looked like in those areas. The problem being that Stats Canada stopped doing the mandatory long-form census in 2010. So the information that they had was dated by 4 years, and you couldn't compare the new communities with the old ones. So while they were extrapolating and saying everyone who lives in Saddle Ridge is reflective of everyone who lives in Skyview Ranch, that was not in fact the case. So we went straight to the source and interviewed people who had bought in the new North neighborhoods and found that the demographic was in fact completely different than what they thought they were getting. So data can be dangerous if it's not understood properly as well. So I think it's important to look at things a little bit differently, do a little bit more digging, and then provide a more robust picture.
Very cool. That's a good example.
Thanks.
And a little disturbing as well.
Yes.
So this is a little bit different from the original question I asked, but if you were CREB, what would you do with our stats output? Would you change anything from what we're doing right now? Go to Richard. Anne-Marie, by the way, I'm not asking Anne-Marie because I know her answer. Thanks for your input, Anne-Marie.
Well, I'm actually building on the question. You said barriers to sharing data. I think there's a barrier to consuming data that everyone has to be very aware of, and that's the packaging component to it. One of the things that John mentioned was you guys you should own an MLS system. You should own the packaging because you're basically the cockpit that everyone comes into and goes to work in every day. That's how their workflows work and everything else. So what we realized with Trebs, we've been working with them for 10 years. We actually embedded into the listings, as you saw there in the presentation. When we put that data right in front of them and made it very easy for them to use, and but the context in which they needed to use it, usage of the data doubled overnight, and it stayed at that level. So when you're talking about return on investment, we do have to get the data in a package that they can consume very easily, and it's applicable to the tasks that they're doing at the time. So if they have to go away and do a bunch of work and pull it together, they just don't use it. Right. And so if you really want to empower your members, you do need to be able to make it highly digestible and easy for them to use. So that is a key thing in terms of what you should be doing with the data and the stats. First of all, make it digestible in a way they can use. If you're not doing that, then you're really missing a big opportunity. Outside of that, as I said, blending it with other data, I think, is very important. We use the commercial deals that we use, was mentioned, I think, by someone in the audience was asking about the commercial side of it. So we have leasing transactions that we put in there. We have the commercial sales. We track land transactions that's in that database as well. So getting that data in front of the brokers there might be a traditional residential broker, but there's those other folks who are doing the commercial side. New homes is another area that we do spend a lot of time tracking. That's 20% of the marketplace. And in many MLS systems, it's a void. I mean, it's just not there. So how do you get that data in front of them so they can look at it? They lose a sale because they've been working with someone and then they get a note that said, "Oh, I bought this new home development. Oh, thanks." Yeah, that's not a good. I have no idea what you're talking about. so that's a place you want to avoid. Yeah. We're not doing all the development permits, I should say, but we are doing development applications. So on the new home side, so if someone's buying land, what are they doing with the land? That lets you know what the neighborhood's going to look like in a couple of years. So now looking forward, that predictive side of it is what is this going to look like in the future down the road is a very powerful thing to give to your members to do. Which leads into, of course, the predictive analytics, which is tricky to do unless you have good data. But if you have it, it then helps benefit lead generation, which is what we heard from Remind. We don't need the big brother world to do some of those analytics. It helps, it's incredibly powerful. But a lot of people just don't do basic mining, and it's across the board. So what are those things that someone might generate a lead sale? It could be when the mortgage is renewing, right? Is it time to look at that? Should I be trading up? What's my coverage rates? Have interest rates drops? May want to buy another house. Very, very non-automatic ways of looking at data. For all of you who have LinkedIn profiles, I hope you're adding all your clients to your LinkedIn profiles because then you'll get an update when they get a new job. Mm-hmm. When I get a new job might be a big indicator as to when I'm looking to maybe move because I've either got more money or I've got a job at a different company or something like that. Like these are some really interesting ways that you can start mining the data for lead generation. Efficiency is very important. Like I said, having it in front of them is one thing in terms of just their workflow, but also not getting hung up on if we can have that more integrated solution on the transaction. We're talking about what the banks need, what the insurance needs, the ability to coach your client to say it's okay to put it in a non-conditional bid on financing because we know that this should be good with the bank in terms of what the value of the house is. A few little coaching in terms of where they sit in the overall financial scheme. You can give a lot of value to your client and make things go through smoothly and not have a deal fall apart at the last minute after you've put in so much work to it. Sure. And then I think brand new ways to actually increase the revenue pie for yourselves. You see in different marketplaces for various reasons, might have different dynamics, but the rental market. So here we have RentFaster and Treb. A huge number of listings are on the MLS system. Brokers are making a good living on that business. Thinking about other services. So again, actually, if you work with the right partners, you can actually deliver services to people who need them, whether it be related to financing or other things like that, and actually create that to be a revenue source for yourselves and grow that business. The rental market, the data, of course, is quite interesting on that front as well. It's pretty huge, actually. I think where brokers are sitting in a very interesting space where it's not just, you're limiting yourselves to just thinking about how I can only make money when a house sells. I think that's a little bit short-sighted.
Cool. Cool perspective, and a lot of agents in New York City would agree with you. Jody.
I think one of the hangups that we have sometimes is that, knowledge is power and data is power, and the more of it we retain, the more information we have to be the experts. I think if you let go of that a little bit and understand that you're only using a very small proportion of the data that you're collecting, and actually, can I ask that question? Of the data that you collect, how much of it do your members use? If you were guesstimating a percentage on a regular basis.
As far as the aggregate data is concerned and what we actually collect on it, I'd say at least 50% of it.
50% of it. So then there's another half of the data that could be
has
used.
potential. Yeah, that could be more breaking down into different things. And I'm talking from my perspective of what we provide for stats.
Right.
There's a lot of other things that we collect that has some interesting opportunities, but we're not currently doing much with it. So.
Right.
And I think it's that idea of what are the other opportunities and what are the pinch points that others are feeling. So if you've got potential partners out there who are really struggling with ways to demonstrate something with only anecdotal data, how can you help them out? So I'll throw out Calgary Economic Development as an example. They're very actively trying to bring new businesses to our town. And to bring new businesses to our town, you have to demonstrate that people can afford to live here, the people that go along with those businesses. So what can you do to demonstrate that we do have affordability in Calgary, or we have the type of product that's being sought by the type of people that they're probably going to bring in here as part of their workforce? So if you look at the pinch points that others are having, including the City of Calgary, the City of Calgary has the responsibility that's been offloaded to them by other layers of government to provide affordable housing. So what if we were able to look at undervalued assets or something that could be converted to affordable housing based on data that you have? It requires a completely different way of thinking than what we're used to. But how could we take the data that you've got and spin it on its head in a way that addresses problems that we hadn't even considered?
Wow. I know we didn't touch a quarter of what you guys had come prepared to say, but we really appreciate hearing from you guys and sharing with us and giving us some ideas and some things to chew on, and this was awesome. So thank you very much.
Thank you.
Thank
Happy
you.
to be here.